Hey, Dan Passarelli here. Well, we had our Fed announcement today, and wouldn't you believe it, the rates were left unchanged. What a big surprise. Not a big surprise at all. That is exactly what the market expected. But what was kind of a nail biter was what exactly was Powell going to say about what might happen in the future. And you know what he said? I don't know. That's what he said. Basically, if you go through and you read the transcript and you read all the sound bites and headlines, he basically said, I don't know. Because he's not really sure, the Fed in general is not really sure what effects tariffs will have, because we don't know how big they're going to be. We won't know when they're going to take effect. We won't know what countries, what commodities or products they're going to affect. Nobody knows. So it's really hard to forecast what might happen to the labor market and what might happen to inflation when nobody really knows what's going to happen with tariffs, when they're going to happen or how big they are or whatever. So there's a lot of uncertainty. Now, interestingly enough, with the continued uncertainty, the VIX index, VIX, it came down a little bit. I guess actually it kind of came down pretty much what you might expect. It's still sitting well above 20. It's sitting at 23.55 on the close of business today. That's still a pretty historically high rate, which reflects less uncertainty than we had before the announcement. There's always a little bit of juice in the options going into an announcement like this, and into the conference call afterwards, or the press release or whatever afterwards. So it came off kind of like expected, but still historically high. So what does that mean for option sellers in particular? Your covered calls, your cash secured puts, your credit spreads. It means those tend to still work pretty good. It means that when we have a pretty muted response, I mean, the S&P 500 didn't really move much before the announcement or much after the announcement, but implied volatility is still pretty high. That means it's an excellent opportunity, if you pick your spots, to sell covered calls, particularly when the market's up, sell cash secured puts, particularly when the market's down, and the same goes for call credit spreads and put credit spreads. So the options market remains a viable source of potential profits. I've said it before, I'll say it again. This is one of the best option trading markets that I have seen in over my entire 30-year career, just because options are so expensive relative to how the market is trading that there's incredible opportunities that are out there. I hope that helps. This is Dan Passarelli, Trade Smart.